Good afternoon, everybody. Good afternoon, and welcome to Paul's Monday Market Update 178 for Monday, the 24th of March, 2025. I hope you're all well. Hope you've enjoyed a good weekend, and I hope you're ready for an interesting week ahead. As always, if you are joining us here in the live room or you're watching on the YouTube live stream, great to have you here. If you can just confirm that you can hear my voice and you can see the slides, that would be a good start. Make sure the technology is working in our favor as opposed to against it. For those of you joining us for the first time, the Monday Market Update is literally just that. It is me flying through as much as I can possibly cover in the next 30 minutes, looking at strength and weakness within FX markets and indices and commodities, looking at some charts of interest for instruments that might be of interest for you want to add to your watch list, and then a look at the live markets. It is not a signal service. It is not a trade recommendation service. It is literally just me updating you on what I'm looking at, which might help you in your own analysis. That's great. Thanks very much, guys. Thank you for that. As always, you're always very welcome here, but just remember that you are responsible for your own trading decisions. If you want a little bit more help or support in your trading, next week from the start of April, the VTP Tear It Up Accountability Group starts there. The whole idea being that I speak to lots of traders all the time. All of them tend to have their own ways and styles of trading, but invariably what actually is that they all know what they should be doing, but very often they're struggling to actually do it. And so the accountability group is a series of weekly, monthly calls in an effort to actually bring some accountability to your trading. So, as I said, most people know what to do. They just have a problem actually following through on it. And sometimes an accountability group can help people sort of develop that. So we'll be looking to start that from, 1st of April next week. If you want to join us, you can see there's a bit.ly code there, or you can QR code there to get more information and details on that. As always, if you want a little bit more education this afternoon, I'll be doing the Monday Market Matters webinar at 2 o'clock London time for active trades. You can register on their website or on that QR code there. And today, the education element will be about trading the first pullback. And I'm also doing a market update every Wednesday evening at 7 o'clock for Admiral Markets UK. So looking at global markets, but also in particular UK stocks. And once again, you can either join us there on the register on the website or on that bit.ly code or the QR code there. So plenty to be going on with this week. All right, let's dig into the main element for our session today. So if you're new to trading or new to joining us, you might be saying, well, what's this? These are elements from my own model, the STAM, that come out of my own weekend analysis. That I spend about 2 hours every weekend doing my kind of big picture analysis with the whole idea to give me an idea of where's the strength, where's the weaknesses, primarily in FX markets, but also in others, indices and commodities, so that I know where best to allocate my time, energy and resources for the week ahead. So where are we and what is this actually telling us? Well, we're into week 13 of the year, as you can see there, for the 24th of March. Where's the strength? Where's the weakness? Sterling, okay. Sterling has nudged its way up to the top of the pile there. As I said, that's probably more to do with sort of anti-dollar, anti-Trump sentiment and others currencies weakening more so than particular strength in sterling. And I would be interested to see if they hold on to this by the end of next week, okay? Because of course we have this week we've had PMIs this morning, which we're going to look at in a moment. Then we've got Mr. Bailey, Governor of the Bank of England, speaking tonight. We've got on Wednesday morning, we've got CPI inflation numbers coming out, okay, and people are expecting that to be a little bit lower, but we'll wait and see. Probably more interestingly is that Miss Reeves, the Chancellor of Exchequer, has her, well, it depends on how you look at it. Some people would call it the spring statement. Others might call it an emergency budget, depending upon your particular viewpoint. But we have that on Wednesday, which of course big details. And on Friday morning, we have retail sales for sterling as well. So Sterling is top of the pile at the moment, but as I said, let's see where we are a week from now. Certainly, that the data has the opportunity to sort of rug pull sterling, but we shall wait and see. And certainly, when we look at the sterling at the end, because we always look at sterling at the end of the session, you'll see there's been some interesting price action going on there. Joining at the top of the pile is euro. All right. Once again, it's jumped its way up there into the sort of top two of the pile of the majors. But as we said, we'll have a little look at the actual live markets there in a little while and see what's been going on there. I think that's just once again off the back of that anti-dollar, anti-Trump sort of sentiment. Also with some of the let's say some of the political grandstanding that's gone on in Europe over the last couple of weeks regarding changing rules and upping investment in defence and infrastructure. They've all sort of made the euro a little giddy, but we'll look at the chart there in a short while. On the flip side of that, Japanese yen started to weaken. You can see it's been pretty strong all year, and that will have been after the sort of lack of rate hike at the Bank of Japan meeting last week. Not that anybody was really expecting it, but it was there. Okay, and we've just seen that kind of has drifted away. And when we look at weakness, well, for the last pretty much, if you look at for pretty much most of this quarter, the condols have occupied the sort of base spaces on the STAM in terms of the weakness. All right, and so we've got Aussie at the bottom of the pile again, along with Canadian dollar. Kiwi dollar had a little bit of a bump, and we looked at it last week, but it kind of filtered out towards the end of last week, and a part of that, as we're going to look at in a moment, that was also a little bit of a relief rally as Mr. Trump started talking about him being a little bit more flexible on tariffs. He's referring to April 2nd as Liberation Day, when tariffs come into place. It seems a bit of a strange way to describe it, but each to their own. When you're the kind of powerful man in the world, most powerful man in the world, you can basically say what you want, and we all know he's quite happy to say what he wants at the best of times. So we will see how that particularly plays out. In reflection of the dollar's still sort of fair to middle, okay, and we'll look at that in a moment. When I look at the individual currencies, look at that for sterling and euro, they are all and have been for the last couple of weeks, okay, increasing in terms of they're all been in STAM buying environments. All right, so that always gives me a kind of confidence and belief when the STAM and the price action and the sort of STAM currencies are in alignment there. Certainly, we started this week with that little bit of, as I said, there's a little bit of that kind of relief rally there, right, after sort of Trump's flexibility on tariffs, and actually what you can see is that's pretty much a kind of a risk-on sort of start to the week. Okay, dollar and yen at the bottom of the pile there, but we will look at that more. When we look at the indices, once again, we had that little bit of a relief rally at the end of the week, and we'll look at that in a moment. But we're still looking at, for the moment, tactical shorts in Dow and S&P, strategic shorts in NASDAQ and Russell. But look at the price action. Joining that, not a surprise, Nikkei, okay, Aussie. Oil has also been a strategic short, all right, with all the kind of how would you describe it? All the shenanigans going on and all the kind of doom and gloom, then of course that has an impact on what people perceive as what might be demand for oil, or rather the lack of it. Gold and silver back to being strategic buys. Their price action is pretty interesting. Bitcoin, even though there has been a little bit of a relief rally and Bitcoin has rallied a little bit, it's still a tactical short by my own model. So plenty going on, plenty of shifts happening. As I said, we've already had a busy morning, PMIs, which we'll look at in a moment. We've got a bit of data coming in, but of course we're getting towards not only the end of the month, but also the end of the first quarter and into new fiscal years for UK, etc. next week. So I expect there to be a little bit of volatility, certainly in sterling pairs this week, okay, as we see the outcome of the news and the spring statement. But yeah, we'll look at that on the charts in a moment. Okay, so as one of the kind of little bits of charts of interest, we don't put this up as often as I should, really, but this is a snapshot from the Bloomberg PMI tracker. So Monday morning, okay, we had our PMIs this morning for France, Germany, for the UK, and then this afternoon we'll have for the US as well. And interestingly, it interests me that the kind of I was looking at the media and they printed the UK's numbers as being good. But if we look at this heat map here for the United Kingdom, and if you look at the numbers themselves, whilst the sort of services numbers was okay, the manufacturing number continues to sort of fall apart. And I think it was the worst number in about 18 months on that. All right, Germany and France and the Eurozone weren't too bad, and perhaps as I said, all of this grandstanding over the last month about investments in infrastructure and defence, for European companies that will have that impact, and also I think perhaps maybe manufacturing people getting stuff sorted in front of those tariffs, etc. But as we can see, pretty much Europe and the UK, for most of the last year, the PMIs, have been pretty miserable. Now, I appreciate PMI is a little bit of a lagging indicator, but you're using it here to give you a little bit of a snapshot of the overall economy and the kind of zones, etc. And you can see that kind of European sort of malaise. All right, now that's probably not telling you anything you didn't really already know, but at least you can start to see it in kind of that heat map sense of just confirming that, especially when we look at it compared to, let's say, the US, all right, for the last year or so, which has been pretty productive, pretty good. Okay, those numbers, they're all right there. And what we're going to see is how are these numbers going to change, all right, between the UK, Europe, and the US over the next few months. I think lots of people might be expecting that tariffs might have a blowback effect on the US and have an impact on services and manufacturing. That's a distinct possibility, but I think really it's more about a case of how are we going to see it affecting Canada, Mexico, and a whole host of other, let's say, Western nations, and emerging markets. How is that going to have an impact over the next few months? Europe might get a little bit of a bump off that, and the US might get a little bit of a snivel, but it's still just a snivel. The US is still, that economy still for the moment still is powering away, chugging away, especially when you compare it to the UK and Europe, and I don't see that really changing, certainly not in the next 6 months myself. All right, let's have a look at some charts of interest then. Okay, first one here is Tesla. Now, of course, I appreciate Tesla's been in the news a lot recently, but not for the right reasons, or certainly not for what you'd term as financial reasons. You can see that really over this kind of last 6 months, that has been a real grand old Duke of York chart, hasn't it? Marched them up to the top of the hill and marched them down again. And really, if you look at that, it prices back where we really were starting around the time of the election itself. And certainly over these last few weeks, you can see that that's been a pretty dramatic sell-off there, in Tesla. And listen, you're free to have your own opinions on whether you love or loathe Musk or Tesla, you're welcome to have it, all right. That difference of opinions is what makes a market, isn't it? And it's markets that we're ultimately interested in. Me, I think that was a great interesting short, all right, from back up from being up here, tickling the soft underbelly of $500 to us now being $250. What I'm kind of intrigued in is having had this kind of sell-off last 2 weeks ago, we just had a pinball there, a rejection candle at the sort of 200 period moving average at this sort of 240 price, 250 price, and then last week we printed a sort of a kind of bullish sort of inside bar pin bar there. So whether you love it, loathe it, there seems to be support there, all right, between that sort of 220 to 240 region. There seems to be support there. So now you'll be looking, if there is support, is there enough support for there to be a bit of a relief rally back to 300? If we're going to get a relief rally in stock markets this week, is there enough to give it that little bit of a bump back to 300? If it does, well, there we go. You trade what you see, but if not, and we continue to roll over back then you're looking at $200 as your next particular level. Okay, next chart of interest is Boeing. Now, I appreciate we only looked at these a couple of weeks ago, and you might be saying, well, why have you pulled this back up, Paul? Well, it's if you've watched any of these sessions over the last few years since lockdown, I'm not exactly the biggest fan of Boeing. Okay, certainly as a company, and I'm sure you've seen the news pieces for them over the last few years. They've been a bit of a laughing stock, and as I've often said, they will probably be a cursory tale in probably an MBA textbook, in the next couple of years. But as I said, I've been pretty hard on them, and I've done well shorting them. But you also have to sort of give, you have to be measured. And what we've seen here, okay, over the last couple of weeks is invariably, we came back down to this 150, and we reversed in an effect a form of a morning star formation, which would be, a bullish sign. What is that all about? Well, there's probably a couple of things, but really what was interesting to me is on Friday, when the world did have an aviation interest, okay, primarily looking at what was going on with Heathrow Airport. The Americans also, and Trump in particular, released details of the United States Air Force's next NGAD, is it Next Generation Air Dominance Platform or aircraft, the F-47, and the people got a little bit of a hint at that, okay, and it's kind of interesting for a couple of reasons. One is that it's called the F-47, which is basically they said, okay, in the press release was that it was basically, it was a reflection of the fact that the US Air Force started in 1947, and it was a reflection of that history. I can't also help but think that Donald Trump is the 47th president of the United States, and perhaps Boeing and the USAF had decided to sort of butter him up and play to his ego and make him feel all bigly and strong by naming it the F-47 as well, so that he'd get on board and sign it off. Because the interesting thing is that Boeing themselves, this is their first fighter project since the P-26, which I think was back in the 1920s, 1930s. Now, those of people who know would say, well, actually, Paul, Boeing bought McDonnell Douglas back in the 90s, and they were fighter guys, and yeah, I'd take that on board. The F-15 and F-18 are Boeing products these days, but it is curious to me that Boeing, a company who are having struggles with the USAF, all right, in terms of their KC-46 Pegasus tanker, and a couple of other projects, and also the fact they couldn't get those astronauts, okay, off the space station. It seemed an interesting choice that Boeing had been selected for the 6th generation fighter jet. I will be intrigued to see how this particularly plays out, all right? And based upon all of the, let's say, the shenanigans going on around Europe and the US and defence, I will be intrigued to see how this particularly plays out over the next couple of years. But anyway, we can see it's given Boeing a $30 jump there over the last 2 weeks, okay, on the prices. So it might be interesting to see whether that has any momentum to take it back to $200, or whether that is just a bit of good news and then we fizzle out and go back to same old, same old. So as I said, you might want to watch that over the next couple of weeks. And quickly, and what's interesting is that this is the weekly chart of Lockheed Martin. So, for every competition, there's a winner and a loser. So Boeing have won the US Air Force's 6th generation fighter jet contest. And, most people would have thought that Lockheed Martin would have been, very much in the in the running for that. Certainly seen as they produce and deliver the F-35, which is the kind of, I think, the biggest and most expensive defense project in the world. But of course, they've now lost the US Air Force project. But also, not only that, any hopes they might have had for basically winning the Navy's version of the 6th generation Air Force or 6th generation fighter, that has basically been kicked into touch as well. Lockheed Martin were told that they hadn't met the requirements, and so there's no bid. Which means that, seeing as there was Lockheed Martin, Boeing, and Northrop Grumman, and Boeing have won the Boeing have won the sort of Air Force contract would probably lead me to believe that perhaps Northrop Grumman are probably in the driving seat to win the Navy project. So let's just watch that over the next couple of weeks. But in the same way that we saw a morning star on Boeing, to me that is an evening star. All right, the reversal on the weekly chart of Lockheed Martin, which would give us an indication that we are probably at least maybe going to retest these lows at 420. And then you're looking at sort of that kind of gap area here around about just in front of kind of 400 to 410. So once again, as I said, I'll be interested to see if this can drift its way down to at least that 420 range. Talking of other companies who are having a bit of a tough time, Disney, all right. There's an awful lot going on with Disney, and very little of it is good, I would suggest. But anyway, once again, it's a market. You can make your own opinions, all right, and do what you please. But I was intrigued to sort of see about how what we had over this last weekend was the release of Disney's remake, their live remake of Snow White. They spent something like I heard something like about $300 to $350 million, and my understanding is, when those numbers are released in terms of how much they've spent, invariably that's actually not the full number. There's a whole host that gets kept off the books to basically sort of try and squeeze the juice. So people were a bit disappointed when invariably the film only made, I think, 45 million in its US release this weekend, and also I think about 45 million globally as well. So the likelihood of it becoming a big success is unlikely, and the market was already realizing this. Look at this for the last couple of weeks, as the news was coming out about what a shocking movie it was, how terrible it was. You can see what that has had on the impact on the share price from just over a year or so ago, being just north of 120. You can see that we've tapped the 200 period moving average, and we're bang, we're closing down beneath that kind of 100 big round number. So will that, we can see that will that basically have enough to sort of get itself back up above 100 and hold it, or will it start to drift its way back down to this kind of $90, $88 region and stuff? That's what I'll be looking to see what the reviews are like, and see how badly that impacts the share price over the next couple of weeks. And finally, okay, there are a few earnings releases this week, okay, but probably one of the most notable ones for retail traders is GME, GameStop. This is the monthly chart, okay. GameStop was one of the meme stocks, okay. Some of us will remember that from a few years back. You can see this here yourself, right? You can see all the sort of madness that went on there for a few months, where basically a stock that was trading around about, I think it was about $7-8, all right. Certainly sub 10, bumped its way to $120 there, okay, over in a period of a few weeks, etc. But once again, having done that, it's literally traded its way back down to 10. We had a little bit of another bump up to about just under 70, but once again, it's beneath that kind of weekly. This is the monthly 50 in that range. Look at that, we're trading around $25. So I mean, yeah, if you bought sub 10, you're still ahead of the crowd, but there's an awful lot of people who bought, okay, will have bought up here, okay, and you have to wonder, have those people sort of, taken the loss, or are they just holding on to see, hoping that we basically get some parabolic move? If you can give me any idea of what would cause or generate such a parabolic move, then please, by all means, let me know. Personally, I don't see it. I think that basically this is just gonna drift its way, and as I said, it's caught there between its 20 period moving average and 50 period moving average at $25, and I don't really particularly see anything there to get excited about. As I said, I think their earnings come out tomorrow after close. People aren't expecting particularly good numbers, so let's see if that basically sort of drifts that number even lower. But there's another cursory tale there about decide in haste, repent at leisure. So make of that what you will. Okay, so there you said a few charts of interest. Let's switch across to the live markets now and have a quick look. I appreciate we did quite a bit on charts of interest this week, but let's have a look. There's plenty for us to talk about in terms of the live markets. So if you just bear with us for a moment, and we'll take a look. Right, let's go. Where should we start? Yeah. Okay. All right. So that's not what I want to do. Let's have a look here. Right. Okay. So I'm hoping that you can still hear me. Hoping that you can see the charts. This is the indices chart. Dow on the weekly, NASDAQ on the weekly, S&P 500, Russell, FTSE, Nikkei, DAX, and crude. Okay. Those of you join us every week talked about basically the how the dynamic of how these particular big American indexes were going to react around the 50-period moving average. Were they going to hold? Were they going to flip? Were they going to continue? So you can see, let's clear this. Dow, all right. Dow basically at the end of last week, that kind of had a little bit of a relief rally there off that 50, didn't it? After Trump talked about its flexibility on tariffs. The NASDAQ came back up to the 50, which I talked about in one or two other sessions today, starting off, okay, is kind of drifting back above it. Same with the S&P 500, okay? Effectively it has bounced and made and formed a swing low there, okay, at the 50-period moving average. The question is there enough to basically to sort of ramp us back up towards 5,900? We shall wait and see. Certainly the Russell put in a swing low there. So, we've got weekly swing lows there. The question is that enough to hold? Is that an indication that basically we're going to start to get some relief rally? Okay, some move off that 50 over the next few sessions. Because once we've got that kind of relief rally there, I wouldn't say it fell through to our to ourselves and our local neighbours. Look at FTSE here. FTSE weekly chart, we're having sold off there. Yep, there was a bit of a bounce, but last week it's not an inside bar bearish pivot, but there's nothing bullish about that, I would suggest. Okay, and as I said, we've got all of that data coming out of the UK this week, and we've got the spring statement, and I wonder if that's going to be enough, as I say, to just basically to sort of rug pull any remaining confidence in the UK economy. Okay, I wouldn't be bearish on that at the moment. And also the DAX here on the weekly chart, last week's candle, it's a bearish pin mark, a nice double top there. That doesn't necessarily mean that the party's over, all right? But I would just be looking at that on the daily chart. Okay, it's very much a nice double top. We failed to make a new high on that. Now the 20 is held. Okay, I'll be looking. Can the 20 hold? And if it can't, drop to the 50. That would be an indication. That would be starting to put that double top into place there. Quick look at gold. Gold, listen, the weekly chart, that's its highest weekly close and above 3,000 there on the weekly chart. Okay, so you don't fight it. Okay, simple as that. If I look at the daily chart, the last couple of days weren't exactly bullish, but as I said, 3,000. Look at the way 3,000 was resistance here, then it became support. All right. I think we'll come down and drift and touch it and test it again. Personally, I think 3,000 is where we're heading to on our goal to test it. Silver had a bearish week there. Okay, after the kind of last couple of weeks of push bulls back, I would still probably remain bullish on silver at the moment. Once again, the daily chart back down to the 20. The 20 holds, we're bullish. If it doesn't, we're down to the 50. That's the way I'll be looking at that at the moment. All right, let's have a quick look at what we'll do is we'll have a little look at the dollar and probably just a little look at sterling as well. Okay, we overrun a little bit there. I apologise, but as I said, I'm always just trying to shove in as much as I possibly can and share with you. Okay, so you've got stuff to take away and utilise in your own trading endeavours for the week ahead. Clearly I'm running lots of packages there at the moment. All right, so that's always that never really helps, does it? So we've got about 5 or 6 different trading packages running all at one particular time and place. Come on. Well, whilst that makes its mind up, we can have a look at euro. All right, let's have a look at euro whilst the dollar charts decide to upload. All right, so this is a profile on euro. Remember, euro is now number 2 on the STAM, and a lot of that is euro dollar, euro sterling, euro Aussie, euro CAD, euro yen, euro Swiss, euro Kiwi, and DAX. DAX we've looked at. Euro sterling we'll look at in the sterling at the moment. Euro dollar, bang. You can see we pushed our way up there, but we're at that weekly 200, and the last 2 weeks are not exactly bullish, are they? If anything, that was last week is a very bearish, all right, very bearish candle, okay, and that's as on the weekly chart. If you look at euro yen, okay, the last couple of weeks we've had bullish, but then what did we do print last week? We printed a bearish rejection candle off the 50 period moving average. Look at euro Swiss. We've had a couple of weeks of really strong euro, which is changing the STAM, but last week was a bearish inside candle. Look at here, euro Aussie, couple of really strong bullish weeks, but then that's not necessarily, I wouldn't necessarily say that's totally bullish there against the Aussie. The euro CAD last week, okay, was as a bearish candle. Euro Kiwi, okay, it was not particularly bullish. Now, these could be, maybe these are descending wedges or bull flags, and we get a move off them. Remember, the condols have been very weak, but I would just be watching these, okay, euro over this week, all right? It's had a big bump that's pumped it up into the STAM, but the weekly chart's not exactly sort of not exactly exciting, shall we say? Not exciting at all in that particular sense. All right, so finally, my dollar profile has decided to show up, okay? So this is dollar on the weekly charts, Aussie dollar, Kiwi dollar, euro dollar, which we've looked at, dollar CAD, cable, dollar Swiss, dollar yen, okay? And the dollar index here. Let's have a look at the dollar index, okay? Let's see what the score is. So we have, as we've said, we've had dollar bearishness, okay, for the last couple of months there on the weekly chart. Last week we've had a bit of, we've had a rejection candle the week before. Last week is, I don't think it's an engulfing candle, but it's just, it's a bullish candle. The question is, as I said, is that just a little bit of the place of a relief rally here? I did a piece last Wednesday. Yeah, here's the daily chart, and quite a few oil, quite a few other elements. They were looking at having like there's a bit of a double bottom there, I'd say, with the dollar index, but really, for me, I'd be saying we need to look at it drift above that kind of 103.70 level, then really 104. I think 104 becomes a level that needs to get above there and hold, and above that daily 200. But I think the strong sell-off for the moment is paused. All right, I'd look at that as a bit of a double bottom. That doesn't mean that we're just immediately long dollar. I just say that that pause is in place at the moment, and would basically confirm what we've seen. Remember that euro dollar, which we've just looked at there. You might look at that euro dollar on the daily chart. You might look at that as a little bit of a double top there as well. And what we can see is, for example, Kiwi against dollar, which was strengthening up a bit. Actually, it started the week really strong, but finished its bearish, all right? As did the same with Aussie dollar. Started the week really strong, but bearish, finished it there. Dollar against Canadian dollar, and we haven't even really got into Canadian dollar and all that's going on there, has drifted its way there. If we look at dollar Swiss franc there, okay, once again, it's just the last couple of weeks having the really strong sell-off. There is a little bit of support there, okay, a little bit of support there that we can just watch and wait, and maybe we go sideways into the end of the quarter and until tariff liberation day. Remember, there's still a week to go of that, so I suspect there'll be all sorts of negotiations and shenanigans that will go on. All right, let's quickly finish off with sterling. Okay, so here's what we've got here: pound against dollar, euro sterling, pound Aussie, pound Canadian, pound New Zealand, pound Swiss, pound yen. Remember what I was saying? The condols have been primarily weak, and that's reflected there. Okay, pound against Aussie continues, pound against New Zealand, pound against Canadian dollar. Last week was a little bit of a interesting one, but that wouldn't be enough for me to just be short sterling and long Canadian dollar. Let's see how that particularly this week goes in terms of the UK data, but that has been strong against the condols, and perhaps that's one of the things that has basically helped keep the sterling strong, because if we look at cable, bang, cable, we've had a couple of good weeks, but then last week, look at that, we went back to 130, but that's a bearish, indecision candle followed by a bearish rejection candle. If I go down to the daily chart, it's not the double top we saw in euro dollar, but you can see 130 at the moment. All right, 130, we tried to push up through it, but there was no joy. Now, as I said, maybe we will see what comes on this week, okay, whether we'll get sterling weakness, whether we'll get a bit of a sterling rug pull back down to about 128. Let's just see. That's what I'd be expecting if the rest of the data is not great for sterling, for UK and sterling. Even pound against yen. Look at that. You know, we pushed up, but you know, we came back. All right. There's a false breakout there. Right. False breakout there on that. Pound Swiss just loves to annoy me at the best of times. Okay. But you'd look at that as actually last week was a weekly bearish inside bar. Almost though, like if you look at the lows are getting higher, those highs are getting lower. It's almost like it's coiling up there. Okay, not terribly pretty on the daily chart, but on the daily chart, it is holding above the 20 and it's above the 50 and it's above the 200. So that is still bullish. It's just the price action doesn't exactly make anybody really want to get terribly involved with that. And then finally, euro against sterling. You've seen me bang on about this for 18 months, all right? The 50-period moving average on the weekly chart acting as good resistance. And once again, that's what happened last week. Last week is that, you can see having the week before rejected it, and then we kind of drifted our way and had a lower close there. And if you look at the daily chart was stuck there between the 50 and the 200. Maybe the kind of sterling news this week will be enough to shift that. Okay, if the news is good, well then basically maybe we'll see the a continued drift away back down to 83. But or if the news is terrible, well maybe we'll get euro strength and it'll get back up above that daily 200. We shall wait and see. Okay. There you go, ladies and gentlemen. Let's draw a close there. I appreciate around a little bit there. Just lots to share with you. Okay, lots to help you on your way. As always, I hope you found that useful. I hope that's given you just a little bit of some things to take away and work upon. For those of you on the VTP, there will be the call tonight, okay, at 7, and the stage 2 call tomorrow. As I said, if you want some assistance with your accountability, kind of group sessions will start next week, and you're welcome to ping me if you want to have a conversation about that. For the rest of you, I hope you have a fabulous trading week. Okay, trade well, everybody, and I look forward to speaking to you soon. Many thanks. Cheers.